Well, look, I think that your audience was fantastic in their support for the INX token during our IPO. We really appreciate it. I think that there's a lot of folks maybe listening to this, and this is the first time they've heard of the INX token. All I can say is we've laid a table for regulation. We've worked with different states to get the MT licenses. We've worked with FINRA and the SEC. We have the broker-dealer, the ATS. We really are looking at migrating all equities onto the blockchain.
Hey, welcome back everybody to Altcoin Daily. My name's Austin, here with Aaron, joined by friend of the channel and returning guest, Douglas Borthwick, who is the Chief Business Officer of INX, a regulated cryptocurrency trading platform. Douglas, thank you for joining us.
Hey, thanks very much for having me. Great to see you guys again.
Yeah, man, it's been almost over a year, so I know we have a lot to talk about, but just for all those new subscribers, could you go over your background in traditional finance, I believe, one more time, and then also what is INX?
Sure. My background was, I'm from Scotland. I came over here when I was a young slack boy at 16 years old. Did undergrad Carnegie Mellon, business school at Yale, 10 years at Morgan Stanley running foreign exchange derivatives trading desks. I went to Merrill Lynch to run a proprietary trading desk, Standard Chartered to run Latin America trading. Then I went to a company called TPI Cap, an interdealer broker, where I built a company called Chapdelaine FX, a large FX ECN, or way to electronically trade foreign exchange. And then I heard about a guy in Israel called Shai Datika, the CEO of INX, that he'd gone to the SEC to do a regulated ICO that would be for the first ever IPO on the blockchain of a registered security. So a full security, not one of these utility tokens or white paper based thing, but based by a full prospectus. Knocked on his door and said, look, I got to be a part of this. And that's how I ended up with INX, and that's my background.
And for our audience, INX is a trading platform. So they would go there and it's just like a Coinbase, only more regulated, or what?
Well, I don't know if it's more regulated. We're regulated in the same way as Coinbase for the trading of cryptocurrencies. But what we have that Coinbase doesn't have is we also have a broker-dealer license for digital assets and an ATS, alternative trading system for digital assets. So we can list securities that are digital on our platform. We can list cryptocurrencies on a separate platform. Soon that'll both be under one UI UX through one app. But also we have another business, an interdealer broker that deals directly with banks. You know, we've got connections with the top 50 banks in the world. And we'll be trading cryptocurrency derivatives with them, hopefully in the next couple of months. So we've got three different business lines. Cryptocurrency, I guess, would be the one that most people in your channel are familiar with. Digital securities, they will be familiar with very soon. I'm sure you've heard the SEC talking about things. And also this interdealer broker that deals with the banks directly.
Excellent. Now, what was the process like going about getting those licenses? And was there anything you learned working so closely with the SEC?
Well, let's talk about working closely. We spent 950 days working on a prospectus. Now, normally when you sell a security to the market, what you do is you copy and paste the risk factors from the last company that was very similar to yours that went public. For us, there was no company that was similar. There was no sort of definitions of the blockchain, of Ethereum or smart contracts in a prospectus. And so we had to work through a lot of this through questions and answer periods with the SEC. And it took about 950 days. Now, in doing so, though, we've created a route for companies to be able to raise capital and then list and be available to the retail public in the United States and elsewhere. And that's something that didn't exist before. Before, digital securities were really limited through private offerings to folks. So, you know, and the last time I was actually on your show was in the middle of our raise for the security token offering. And it was the first of its kind. I think it was very novel when we first talked about it. Now, we ended up completing that. We ended up raising just shy of $85 million from 7,250 investors in 74 countries. So I think that could be seen as a success. By the end of 2021, if you put it up against the other IPOs in the US, would have been in 7th place in terms of the performance of the token. So that was pretty exciting. Especially for something that's brand new, a novel concept, because we didn't sell equity in our company with that. What we sold was 40% of our net operating cash flow cumulative. So what that means is, you know, if we were to have a cumulative net operating cash flow or profit of around 100 million, then 40% automatically would have to be sent out to all the token holders on a pro rata basis. So that's something very new, because it's not equity, it's not debt, it's an unsecured liability on the balance sheet of the company. But for investors, it's sort of like you can participate in a company in the very, very early stages. Because as well, when we first met, we didn't have the licenses, we had a vision. Now, since then, we've worked with individual states, and that's how you get things called money transmitter licenses that allow you to offer cryptocurrency trading to folks in different states in the United States. We also bought a broker dealer called Open Finance, and we bought a transfer agent. So now what we can offer is something called nose to tail. Now, nose to tail means if someone comes to me and says, "Look, Douglas, I want to raise capital for my business," I say, "That's no problem. We can do that. We can go out there, we can raise the capital, we can be the broker dealer of record, we can mint the tokens for you. We can do the KYC and the AML, so make sure that the people buying your security are known to us. We can distribute the tokens directly into your white listed wallet, and then we can list those tokens and have them trading on our ATS." And there's not many companies out there that can do that for digital assets. Now, KYC is important. And AML is, there's lots of utility tokens trading around the world that haven't ever gone through, let's say, a KYC or an AML, because there's lots of exchanges around the world that trade all sorts of things that aren't necessarily under the same legal guidelines that the US is. And so, what we've done is created a very tight ship when it comes down to KYC AML. And I think that's going to be very important. As you listen to Gensler, the SEC chairman, he's made it quite clear that regulation's coming, and it's coming in hard. And what we've done is we've sort of divided very evenly, I think, between what is a cryptocurrency and what is a security. Now, other shops have sat there and said, "Look, this is a utility token. We'll list it. It's making us money." What we said was, well, we really need to know, is it a security? Is it registered in any way with the SEC? Is it for any forms filed? Is it a Reg D, a Reg S? Is it an F1 prospectus, S1 prospectus? If it's not any of those things, then we won't list it on our security trading platform, and we also wouldn't list it on our cryptocurrency trading platform. So, I think we're ahead of the regulators, but I think in the next few weeks, you'll find out from President Biden and from Gensler at the SEC about just where regulation is going to go.
Oh, what do you think they're going to say?
Well, I think that, the way that one thing that the government, I think, wants to make sure of is that, well, they see electronic wallets as being Swiss bank accounts. And if you remember with Swiss bank accounts, a lot of people kept their money offshore, had all sorts of profits there, but paid no US taxes. Now, the electronic wallet's a little bit like that too. Now, some folks have electronic wallets and they trade Bitcoin in and out through somewhere like a Coinbase or maybe through INX. And when they do that, there's a record that's kept, and that record can be shown to the tax authorities should they need, or someone's going to be able to declare it to the tax authorities. But if you're trading with someone outside the United States in a wallet that the US doesn't know about, then there's profits there that the US isn't able to tax. And I think that the biggest impediment that the US finds right now is that it wants to be able to tax people for income that they have. That's one thing. I think the other is, this huge growth in DeFi. And you find there that's anonymous people trading with anonymous people. And that never really works in the United States because the US government likes to have known people trading with known people. Again, for tax reasons, but also for money laundering reasons too. And so I think that you're going to find the DeFi projects that exist, if they want to be in the US or they want to go after the US investor, then they'll probably have to go through some sort of centralized area where folks go through a KYC and an AML, which is where my firm would be able to help out. Once they've done that, then there's a pool of known actors that can trade in a DeFi platform. But the way that they're set up right now for US citizens, I don't think is going to work for the regulators. I think we also have to look at NFTs. Folks are trading NFTs. You see a $50 million trade between two anonymous Ethereum addresses. That doesn't go down well with regulators. They want to know who's selling to whom, because again, perhaps that's money laundering. And so as things have been sort of been a wild west for quite some time, there's been tremendous profits being made. I think that the US wants to know who's making these profits so they can get the taxes from them.
Do you have any inside knowledge that anything official is happening in the next month, or are you just speculating?
Well, of course, everything I say in this interview is speculation, but certainly, we have conversations back and forth, with different regulatory agencies, and the discussions we've had for those 950 days tell us that certainly, things aren't good the way that they're being done today. Now, as much of that is because cryptocurrency in general has kind of come at the US and the digital securities at a time when the regulators haven't really been prepared. And agencies aren't sure where does the regulation start for their agency and where does it end? You know, is this the purview of the CFTC? Is it the purview of the SEC? Is it Treasury? And I think that boundaries have to be drawn, because I think that until boundaries are drawn, you kind of sit in this sort of like malaise where everyone knows and everyone's pushing up against a gate, but the gate isn't moving. And so, you know, certainly we have lots of discussions with regulators. I think that, you know, we get a taste for what they're thinking and what they're feeling, but obviously everything I say here is speculation.
Just checking.
He's on the phone telling Nancy Pelosi when to buy, when to sell. No, just kidding. But so one of the things you mentioned was, and if you could explain this more, one of the things that you do is you help different companies who want to launch a digital security, raise capital, do media, and launch the whole thing on your exchange. Is that correct?
That's right. Yes. So we've got a lot of companies that come to us and they say, look, I've got an idea. I'll give you an example, like a Bitcoin miner. Maybe the Bitcoin miner secured land, they've secured energy, and now they want to buy the Bitcoin miners that are on boats coming back over from China, because China's obviously banned that. Now, these folks want to raise capital. So how do you raise capital? Well, you go out there and you say, look, guys, we're raising money to buy Bitcoin miners. We think there's going to be this sort of return on that. They put together a term sheet. We issue that term sheet. It's put on a website for the issuer, and then go out there and make people aware that the issue is there. When people are aware, they click on a button that says invest now. There's a KYC AML that's done. Once that's done, we whitelist an Ethereum wallet. We send the tokens directly to them. In general, an ERC 1404, which we see as the most secure of all the protocols that are out there, or the standards. And then once people have received their tokens, once any kind of lockup period is over, we'll then list it on our ATS. So that's, you know, pretty exciting stuff. Now, folks haven't really done this before. You've seen some real estate that's traded in this way, you know, and at other ATSs, and the interest in those types of things it's there, but it's not, you know, something that's moving up and down based upon a value of an underlying that's moving. There's not a lot of volatility in those types of products. But a Bitcoin miner would probably be volatile, because based on the price of Bitcoin, it's going to move up and down, because your returns are going to be either as wrapped Bitcoin, you know, Bitcoin wrapped as Ethereum, maybe come out on a monthly basis. Maybe if it was half the Bitcoin mined, that ends up being something like 3 to 5% per month, around 87% per year. I think there's a lot of people that would like to own a security that has, you know, a sizable yield associated with it, but it is also linked to an underlying like Bitcoin, because there's not everyone in the world that wants to buy Bitcoin or can buy Bitcoin. There's folks abroad that maybe are banned from it, or maybe there's different tax structures for Bitcoin versus for a security. And so, you know, we're looking to take these guys out, you know, show them how they can raise capital, as we did as INX, but also, you know, raise large amounts of capital. These aren't just $20 million offerings. Some are 100 million, some can be up to $1 billion. So there's some sizable offerings we have coming down the table. I think the most recent one that's very exciting, and it was, we announced that we had signed an LOI with a company called ALK Capital. Not very well known in the US, but in the UK, I think it's very well known. They're the owners of Burnley Football Club. It's a Premier League soccer team. But here's someone that's putting together a security token. It's going to be a full registered security. So a prospectus offering, just like INX's. And they've got, what, 600,000 fans in social media. Each of their players has a couple of million, you know, followers. And so when they list something, and it's going to be a token that's, you know, related to the club, and obviously, you know, how they do, I think there's a lot of fans that are going to be interested in that. So we're not talking about 1,000 accredited investors. You're talking about 600,000 retail investors that are going to have an interest in something, and maybe millions more based on the followings for each of the players. And so bringing a community like that together is something that, you know, we aim to do at INX, and that there's lots of communities of people out there. Now, traditionally, how do you raise capital? Well, you go after, I think for digital assets, you've always gone after crypto folks. Crypto folks, we think in our Twitter feeds that everyone's a crypto folk, right? But they're not. The majority of the US is an equity person. And you've got to find a way to bridge the gap between the investor in equities and the investor in crypto. And I think that digital securities bridge that gap. But then we have to go out to that audience, because the audience can't just be guys that watch, let's say, crypto YouTubes. There also have to be folks that are monitoring their stocks on different websites, or having their portfolio kept up by different folks that have different followings. And so we've got to reach out to them and grab them. Now, who's interested in a Bitcoin miner? Well, probably someone that invests in mines, someone that invests in anything in the Bitcoin space, that are public securities. And so you've got to be able to take their attention, grab it, bring it over and say, look, why don't you check out this offering here, go to this website. So there's a lot of different things that are attached to a digital offering. If you just do a digital offering and you don't make people aware, then no one ever comes to the page and no one ever invests. So awareness is a huge part of the raise when it comes down to a digital security.
One thing that I've seen, and I think that's very clear over these last 12, 18 months, is that institutional money and institutions, they want to get in to cryptocurrency, but they are waiting on that regulatory clarity. Like, I know you guys recently partnered with a huge, Japanese, I think it's GMO group.
Right.
Could you talk about what that is and what that means from the institutional level?
Yeah, so GMO Group has stable coins, the GN and the Z dollar. Now, both of these stable coins are looking for more regulatory approval in Japan. But, I think you've seen the success of, let's say, USDC in the US, certainly G dollar Geminis, in that, stable coins have tremendous potential in that you can use them for payments, but you can also earn, sizable yield for it. If I buy the yen today, there's a negative carry when I put it in the bank account. If I buy GN today, there's no negative carry. So I don't want to pay someone interest if I'm buying the yen. So maybe if I do it through GN, I don't have to worry about paying someone interest. Instead, I just hold the digital equivalent. And so this is going to be a very big deal once, one, Japan gives approval for these types of assets, but two, the dollar is pretty important in the world, but so is the yen. Between the dollar, the euro, and the yen, you've captured pretty much most of the currency transactions that happen on a daily basis. And so we thought it was very important to be able to bring something like this. And now stable coins are also, not all stable coins are the same. And Gensler, again, the SEC chairman, brought this up a couple of months ago, where he talked about how, look, if USDC, that's Circle's dollar coin, if that's backed by money markets to an extent, well, maybe that's a security. One thing about Z dollar and GN is that they're backed one-to-one with the respective currencies, and so they'd never be seen as securities. And so, we think that there's going to be a lot of appetite for that. It's going to be mostly, I think, going to be used for payment purposes, but I think folks will also use it at some point to, let's say, transferring money onto our exchange so they can buy a digital security. We're going to see where it goes, but I think that there's some excitement there, and we'll see what happens.
Douglas, let's take a little tangent for a second and talk about just regulation in general, because a lot of people that come into cryptocurrency and Bitcoin like the fact, oh, this is a way for me to opt out of the system. But obviously the regulators want to protect the investor and make it safe for everybody. Do you see DeFi going away entirely? Is there a place for a Uniswap like DEX or lending and borrowing along with the fully regulated?
I'd say that there's maybe 5-10%, and these are numbers I'm just throwing out there, of the folks that are in cryptocurrency today that want to be outside the system. Now, by having them operate, it means that the huge wall of institutional money is limited and they can't get into the system. And so the system's sort of looking at this right now, and certainly the US government, and saying, look, maybe 5-10% of the folks that want to be outside the system can move offshore with their trades. But meanwhile, that would allow the institutions to get involved, and that would be a much, much larger pool of liquidity into crypto. So I think that when folks look at, oh no, the SEC is going to do this or Treasury is going to do that, what they have to remember is that when the SEC and Treasury come down with the rules that they'll come down with, that means that the institutions can start getting involved. Now, I'll ask you a question. Who do you think trades more equities? Retail, the individual, or the institution? The odds are it's probably the institution. And so if I lose, let's say, 15,000 users because they don't want to trade on the US exchange anymore, but I add Fidelity and I add, Wellington Management, huge real money firms, well, that's probably a win for exchanges in the US. And I think that there's a lot of folks that are waiting for that to happen. Now, it means that some folks that want to skirt the system will leave it, but at the same time, huge new entrants would come into it. Now, DeFi, I think that what you'll find with DeFi is that companies will end up having two different types of DeFi. There's the one where you've got different pools. You've got pools of completely anonymous users that'll probably be offshore outside the United States. And then onshore, you'll have pools of customers that have been whitelisted with their wallets through a broker dealer or ATS or a regulated exchange, a crypto exchange in the US that's got certain standards that it keeps when it comes to KYC AML, and they'll add them to the pool. And maybe someone like Uniswap will go out to ourselves and some other companies and say, look, can you KYC AML folks and whitelist their wallets? Once that's done, then they'll all be put into this regulated pool and be able to trade amongst each other. So they'll be anonymous other than the fact that they see an address. But of course, everyone's going to know who they were because they've gone through KYC AML, should someone want to know who it was. So it's a management of DeFi that's on a much broader scale. Now, I'll give you an example. Like at Bank of America, if I make a deposit of $1 million and Bank of America, lends that $1 million out to credit card holders paying 15%, well, I'm getting 0.25% for lending my money, for depositing it. Bank of America is getting 15% to give it out to someone, and I have no idea who they are. They're anonymous to me, but Bank of America knows who all these people are. I think of DeFi like that, and that there are times where I could lend money. I could stake something, and then someone else is going to end up giving me a nice carry on it. I don't know who they are. Same sort of deal, but I just get a bigger carry. Now I get a bigger carry because there's no regulation that's there. There's no compliance officers. There's no bricks and mortar, and so the carry comes to me, the person that's lending the capital. So I think that what you'll find is the higher yields will be pushed offshore and the lower yields will be pushed onshore. But I think it would continue. It's just going to do so in more of a CeFi DeFi way, if that makes any sense.
It does make sense. And honestly, a person entering the space wants to, do something they're going to be the safest. And I'm eager to find out how it works out, over the next 5-10 years, because we're seeing like an Aave and a compound make an institutional DeFi. So it's both. They have a KYC'd Aave and a regular Aave.
That's right. And you're going to find that more and more, in that you've got the KYC version and you've got the other one that's offshore. Now, obviously, none of these have a centralized location, let's say. They're decentralized in nature, but the pools are the ones that will be centralized in some way, centralized or decentralized, but the technology would remain the same.
By the way, I'd love for you to go over the use case of the INX token. Should I be thinking of it like a BNB?
Well, the BNB token was raised in an ICO. We were raised in an IPO that was regulated under the rules set out by FINRA and the SEC. The INX token pays out 40% of our cumulative adjusted net operating cash flow. I'm not sure what the BNB token pays out. BNB, I believe, burns their token. We don't burn them. But certainly, if the INX token is used to pay for transactions, then 20% of that would then be retired from the floating INX tokens that are out there. Now, that's something we haven't put into practice yet, but it's certainly part of our prospectus. And so let's say instead of that, maybe we were to do a buyback in the market of a percentage, then as we take tokens out of the marketplace, that means there's fewer tokens receiving that 40% potential payout. And so that's how we, I guess, create the tokenomics. Now, obviously, we've got to start making money, but the ways that we have to make money are threefold. We've got the interdealer broker that's dealing with banks, does something like $95 billion a year in volume. On top of that, we've got the cryptocurrency business that's open in 34 states and territories right now, and hopefully by the end of the year in all of them. And then we also have the digital securities, and the digital securities business is the broker dealer that can raise capital, and we charge when we raise capital, anywhere from 5 to 7% of whatever capital we raise. And then there's obviously the listing. And then there's the books and records that we do as well. And all of these have fees attached to it. The fees all start to add up. From the fees, we take out the costs, and then you're kind of left with, okay, here's the operating cash flow. And that's how it works. Now, another thing with ours is you can't transfer an INX token to anyone else unless they also have a whitelisted wallet. So it's within a very closed gated system. The ERC 1404 also is such that if you lost your wallet, you don't actually lose your INX tokens. We can revoke from that wallet, and then we can reissue them to a new wallet. Another thing people they have a problem with, and we had someone in our community that had this the other day. They had a wallet. In the wallet, they had USDC, they had BNB tokens, and they had INX tokens. The BNB tokens were swiped from them. The USDC tokens were swiped, but the INX tokens remained. They remain because with an ERC 1404 token, if it's asked to move to a different wallet, it looks to the blockchain, checks to see if the wallet it's moving to is whitelisted. And if it's not, it refuses to move. So there's a lot of different security measures that are put into the INX token that don't exist in any other tokens that I know of. And I think that gives a lot of peace of mind to institutions that own it and to individuals alike.
So you can keep custody of your INX tokens on a whitelisted wallet, and you have the, that security which you just described, but I guess because you can't transfer it to another wallet without getting a whitelisted, that's why, like for instance, I can't see it on a CoinGecko listed with all the other Ethereum tokens.
Well, that's right. But if you go on CoinGecko, mostly what you're looking at there is utility tokens on an ERC standard. We're a security. So normally you'd see a security listed on, let's say, the white pages of the Wall Street Journal, or you'd see it on Bloomberg or something like that. Now, we're the only digital security of our kind. So yeah, they kind of decided, well, there's not enough. There's not enough of these types of securities for us to be able to listing it there. But if you do want to find out where it's listed, you just go to securities.inx.co. You can see the last price. You can see where it's trading. You can see the volumes. It's all out there.
And if I hold this token, I get my portion of 40% of the trading revenue that INX is making.
Well, it's not 40% of the revenue. It's 40% of the cumulative net operating cash flow. So that's after costs are taken out. But also, it's not just trading. It's also from the revenue we make from a raise. You raise $100 million, you make between 5 to 7 million of that. Then there's the trading. Trading sums out to something like 0.2% times however much the trading volume is. There's a lot of different ways we have. We also have the brokerage business, ILS Brokers, that's charging brokerage on the $95 billion a year that it's trading. And all of these revenues are added up. Then you take out the costs that the business have. And then after that, you have, okay, here's the cumulative net operating cash flow. And then we decide, there's that split of here's 40% that's then distributed. Now, you're self-custodying your tokens. And so into your wallet, we'll send out Ethereum, or we'll send dollars to a bank account if you give us. But yes, self-custody is something that we, I guess, are a little bit different from any others in this ATS space. We're actually a lot more like DeFi, right? Folks understand what a MetaMask wallet is. Maybe though 2 years ago, they didn't. Maybe there was only 1.5 million users of MetaMask wallets. I'd probably estimate there's maybe 17.5 million today on a daily basis. And that's because of NFTs. And most folks kind of look at a MetaMask wallet and say, well, it's something I can store things in, right? You store your NFTs in there, maybe a little bit of USDC, some Ethereum, and you can use it for purchases or whatever you want to. Our view is that in the future, you'll hold your NFT of your driver's license. You'll hold your NFT of your passport, of your high school diploma, your college diploma, your social security number. You'll also hold NFTs of you'll hold your securities, your digital securities. And you'll also hold your digital currencies that you'll be able to use for spending and use an Apple Pay or something with it to be able to spend your money. And so self-custody is becoming much more important, especially for the age group under 30 that have grown up with Robinhood, that don't really understand what custody is, that don't ever think about picking up the phone and talking to their broker. And so having their broker then, hold securities in their name. I think we've moved away from that. And certainly it's that age group under 30 that's about to inherit most of the largest amount of wealth from the baby boomer generation that's ever moved. And so, we're positioning ourselves where the customer is positioning themselves as opposed to in the old model. Now, the ERC 1404 also, though, makes it such that custody becomes less important. In the old days, you want to lock up your securities over at Fidelity because you didn't want them stolen when they were in your safe in your house. Well, if you can make the stock certificate such that it's very hard to steal because, let's say, it's an ERC 1404 and it can only move to a whitelisted wallet, well, then that means that it's a lot more attractive for you just to custody yourself. One of the biggest issues I think that institutions and others have had with crypto or Bitcoin or Ethereum or whatever is, they hear these horror stories of someone losing all of their Bitcoin and they lost their seed phrase and they lost it forever. Well, that can't happen with an ERC 1404 because we can revoke it and reissue it. So if someone called me and said, oh my goodness, I'd left my MetaMask wallet on my computer and it went in the landfill, I'd say, no problem. I've got all your information here. I can revoke it. from that computer and put it on somewhere else. That, is revolutionary. Just think about that. If you could take all your Bitcoin, wrap it as an ERC-1404 token, my guess is you probably would, because you'd probably want all of your assets such that they were, protected in this sort of way from either theft or from loss. And it's a big problem that you find. There's scams every day, I think, that we read about on Twitter or elsewhere of someone lost their wallet, someone lost this, someone got hacked. And if there's ways that we can mitigate that in as many ways as possible, then that's what we're going to do.
Very interesting. As we look into 2022, what are the expectations for INX? What are you most excited about?
Well, we spent 2021 raising capital and laying the table. Laying the table, I mean, getting all the licenses we needed in the United States to be able to offer cryptocurrencies and digital assets. 2022 is about executing on that vision. We've finished our capital raising on the token side and on the equity side. We just raised another 39.6 million Canada, I think it was, so around $31, $32 million, and listed our equity on the NEO exchange in Canada. So folks can either buy our equity on the NEO exchange or they can buy our token at securities.inx.co. But we've raised the capital. We've got about $90 million sitting in the bank. We've got what we see is around 36 months of runway. And now it's about, okay, onboarding. And how do you onboard? Well, you have an app. That app's the easiest way to onboard folks. Our app comes out in the App Store probably in March, late March, early April. And that app's just going to be for cryptocurrencies. So you go in there, you buy and sell Bitcoin, Ethereum, and a host of other cryptos. But then what we're going to do around July, August is come out with a second app that's going to have these digital securities trading with Bitcoin and Ethereum, Aave, it was something you mentioned. Like all of these are going to be on the same platform. So it's an app that you'll be able to trade in and out of all of these back and forth. To the user, it looks like a single UI, UX, single interface, but behind it, there's actually two different platforms, each reporting to different regulators. So it's threading the needle, but it's very, very exciting. And I think that also will be throughout 2022, announcing different raises, primary raises, where we're raising capital for a whole bunch of different institutions and companies that have very exciting stories to tell. And hopefully we'll have them on your show so they can tell their stories. But, we're going to be out there in the media a lot more, doing a lot of marketing and getting the INX name out. It's just in Daytona, we sponsored the Daytona Speedway for a weekend for this Roar before the 24, along with Rolex and some other folks. But pretty exciting stuff that we're getting into now, where it's about, we've laid the table, we've worked with the regulators the right way. Now let's start onboarding, and onboarding is obviously very important. It doesn't make any sense that I've got licenses if I don't onboard people to start trading. And the next thing you could say is, but there's a lot of guys already out there, Douglas, in the cryptocurrency business, and you're right, there are. Coinbase is a formidable competitor. Was it 75 million people they've onboarded? Maybe I don't know. Is it 7.5 million people that trade daily there? Kraken's in this space as well. Crypto.com, Voyager. There's a lot of guys in the space. But there's not really in the United States that are regulated in this space. And the way I look at it is, this is restaurant row. And you can talk to lots of guys that deal with Coinbase or Kraken today about the customer service, and there's no one there to talk to them. Now that's a lot of unsatisfied customers. Another thing that's out there is that when Bitcoin makes a 5-10% move, there's no pricing. And I'm sure you just go on crypto Twitter when there's a big move and everyone's saying it's down, it's down, it's down. Well, if you've built servers to handle 10 million people, 7.5 million people use it every day, but maybe when 13 million people run for that exit, the servers go down. Well, we're opening up a new restaurant on that row, and I think it would make sense for folks to onboard with us because, what if you may be happy with the service you're getting elsewhere, but if you're not, well, come to us because our phones are empty. No one's calling. And so we can onboard people. Our restaurant has got seats. You can sit down. You don't have to be worried about not getting your food or getting there late. We've got people at the end of the phone that can help you. And I think that if we lead with customer service, we lead with the platform being up when things aren't going correctly elsewhere, then we'll start onboarding clients quickly.
I want to talk about Bitcoin and Ethereum and just crypto in general in 2022. But real quick, before we get to that, because you touched on it, somebody interested in getting INX today, you said they can go to Canada Exchange. Can you just list it off real quick?
Well, if you're Canadian, you can go on NEO and you can buy the equity. And it's INXD is the ticker. If you're American and not Canadian, and if you're from a lot of other countries, you can buy the INX token. And the INX token trades at securities.inx.co.
Awesome. Let's zoom out a little bit and
Let's
talk
talk
about
about Bitcoin and Ethereum.
Let's do it, Douglas.
Where are they going?
You're a hodler, correct?
I am a hodler of both, yeah. And I think of them both in a very fair light. There's nothing that I'm going to say here that's investment advice. This is purely my own thoughts. But I think that there's a lot of uncertainty in the US today and abroad, all around the world, about the legality, let's say, of Ethereum or of Bitcoin and where's it going. And that sort of FUD, I think, always pushes down prices. I think one of the most interesting things is that a large whale can easily move the price around because there's a lot of folks that buy these using leverage. And folks buy it using leverage, they get excited because it moves up 3, 4, 5, 10%. They're leveraged. And then a big whale can put an offer in and see all the prices collapse. And then the big whale sits there on the bid and can accumulate again. And I think that one of the better ways to trade Bitcoin is not to trade it. It's to buy it and to put it in an old lockbox. Because I'm certainly of that view that you're certainly limited in the supply that's going to be out there. The adoption is growing dramatically all around the world. You saw that India just opened up and said, you know what, we're actually going to allow cryptocurrency trading. That's a heck of a population. And I think that as you see more and more countries begin to embrace it as opposed to push it away, then you're going to find more and more interest. And as people adopt it, they buy first $10 worth of Bitcoin, then 50, then 100, then 1,000. And then you start seeing the prices start to move. Now, I think that, we're on a trend higher, but I think that, when people look at someone's career, they always think it was always easy. It was from the bottom left corner to the top right. And we all know that careers aren't like that. There's pullbacks, there's disappointment, there's fear, there's greed. What I find is if you're going to trade it, when everyone's extremely excited, that's the time to lighten up your portfolio. When everyone's extremely fearful, that's the time to then put the position back on. I'm not sure I'm one of these guys that always says buy the dip. There's a lot of dips to buy. There's some point you run out of money. But I do believe that you can sort of have your own fear versus greed ideal. And if you trade the opposite of where the market is, I think that, you don't think about market timing. I kind of think about, look, the market's way too excited about this right now. It's got to be priced in. Or the market's, way too negative right now. It has to be priced in. I look at it, I guess, the way I trade interest rates. The Fed right now, people are talking about the Fed's decision to raise rates, and we get something like five rate rises priced in. Well, that's the time I'd like to buy fixed income because I feel like it's priced in. Just like I think that a lot of fear was priced into Bitcoin was trading around that 36,000 level. A lot of fear. And so buying it when the market's fearful, standing in front of the herd, and then when the herd gets excited and starts buying it up again, at some point I'll turn around and say, you know what, it's a little bit frothy. And as opposed to buying more, I'll probably lighten up a little bit, but always have a key position. And I think that that's sort of, how you have to look at it. It's against human nature. But I think that sometimes, a trader has to be a little bit more shrewd than human nature.
As you mentioned, the Federal Reserve is about to start a series of rate hikes, presumably starting March in 4 short weeks. What does that mean for the average person who may not be familiar with like traditional finance or money? And how do you see that affecting the crypto market?
Well, to be honest, I don't think it really affects the crypto market that much because the crypto market isn't just the US, right? It's everywhere. Now, everywhere is going to start raising rates. So that's important. It means that some people that were into high frothy equities are realizing that their equities are going to start getting hit. And you saw that. You've seen a lot of equities that have been popular in someone's portfolio start to come off because, well, the price of the cost of funding is going to start moving higher. And so frothiness comes out the system. Now, if you're liquidated on your equities because you had a margin position, then you have to take off money where you had a profit. That's going to be in Bitcoin or Ethereum. So you're going to see that market get a hit too, because all these markets are now interconnected. Depending on, it doesn't matter where you are in the world. If you have a portfolio that has equities in it, that has fixed income in it, that has crypto in it, once you get hurt in one, you'll probably take off a position in the other. And I think that that's what we've seen in the last couple of, last month and a half. As soon as the Fed starts talking interest rate rises, people start liquidating positions all across the board. Now it's priced in, people feel more comfortable. But, just because the Fed is raising rates doesn't mean they've stopped printing money. And, it doesn't mean that the money supply is going down anytime soon. It means that, yes, it's going to be harder to borrow capital because it gets more expensive. But again, a raise of 25 basis points isn't going to make me invest now and put my money as a deposit at Chase, as opposed to put my money into Bitcoin and get 6.5% through some sort of staking process at another institution. So, there's still a point where Bitcoin and Ethereum and all sorts of other, cryptocurrencies give you the ability to earn higher yields than, let's say, the US dollar. But also, you're not worried about, while your deposit's sitting there, that they're going to be printing a lot more of the dollars you've just deposited. And so crypto certainly has meaning. And right now, why are they raising rates? Well, it's because of inflation. You saw, I think the CPI number was 7%. 7%. Well, that means that for every year that I'm holding something, I'm losing 7% on my US dollar deposits sitting at the bank. So I need to find a way that I can get more than 7% yield out there in the market. And maybe I think that that's going to be through owning crypto. Maybe not. I don't know. But every investor is going to make their decision based upon the yields that they're being offered by different asset class purveyors. If bonds continue to be at 2% or 3%, maybe I'll put a little bit into bonds, but I'd still like to have my crypto. If bonds are at 3%, maybe there's a couple of equities that I wouldn't want to hold. Instead, I want to own bonds. So there's going to be a shuffling of portfolios as interest rates start to rise. That shuffling of portfolios is definitely going to affect the crypto market, but it's happening in the US, the shuffling of portfolios. It's going to happen elsewhere. Japan will raise rates and the Europeans will, the UK will. But you have to ask your question, why are they raising rates? And it's because of inflation. And inflation means that the dollar or the currency that you're in is losing value. And if it's losing value, well, that means that maybe Bitcoin is worth more.
I love that.
Yeah, I love that. You mentioned that you are a hodler of both Bitcoin and Ethereum. You mentioned that, you're not here to give anybody financial advice. That disclaimer is clear. This is just speculation. Looking into 2022 and beyond, what do you think a good weighting for Bitcoin and Ethereum is? I mean, they're different. One's an open source DApp platform, one's hard money. What are you more bullish on?
Well, I see one as being gold that I don't spend, and the other one being a currency that I think everyone's going to want to spend. So it's like hoarding gas or creating my own strategic petroleum reserve, like the US government has. And that's what I see hodling Ethereum as. I think that Ethereum rails are going to be very, very successful in the future, as much as they are today. And I think that as you move into ETH 2.0, that's going to be even more the case. So I'm sort of building up my strategic petroleum reserve by hodling Ethereum. Whereas Bitcoin I see as being sort of it's a lifeline for wealth, in that you can buy real estate if you can afford it. You can buy a Monet painting if you can afford it. But when there's inflation, you got to buy something that you believe is going to rise in an inflationary background. And right now I see Bitcoin as being something like that, where by holding it, I'm sort of defending myself against inflation and against debasement. And I think that that's, how I look at both of these. You're right. They're completely different animals. They're both very popular animals, but they've got different uses, or there's different reasons why I have them in my portfolio. And I would expect that, lots of folks have different reasons for it.
So right now you're tipped over a little bit Ethereum, sounds like.
No, I wouldn't say that. I'd say I'm probably 50-50.
All right.
Very nice.
No Cardano? That's odd.
No Cardano. Look, I get pitched a lot of coins every day. And I think we all do, right? I mean, I just look on your Twitter feed today when you said any questions for Douglas, you've been pitched about 300 different tokens. So there's lots of people that pitch their tokens that have a different reasoning for why we should own it. Now, I have to take that noise and just put blinkers on, and I concentrate on the INX token. And then on a personal level, I concentrate on Bitcoin and Ethereum on top of that. But otherwise, there's so many coins and there's only so little time in the day to say, okay, well, I think this one's good or that one's good. I see lots of different positives and negatives in different coins, but I'm not here to discuss those.
Final question. Best guess for Bitcoin price prediction by 2030. Fun game. What do you think?
2030?
Yeah.
I'd say 2030. So we're talking about I'm not very good at math.
8 years.
8 years from now. I mean, I could certainly see $500,000 for Bitcoin, maybe $25,000 for Ethereum. But again, things change quickly in this universe. And maybe in the next 20 years, there's a supercomputer that turns around and says, look, we can solve all of this quickly. I don't know. But things change. And so we always know surety today, but who knows what surety is tomorrow? In the 1900s, surety was railroads. Everyone wanted to invest in railroads. Where are railroads today? I don't think there's a lot of people that get excited about investing in railroads. In the about 20 years ago, we all got excited about the .com era, and people invested in things and said, I remember, buy Cisco. Cisco is they're the pipes behind the internet, and Cisco went up and then it collapsed as people try to figure out what to do with the internet. So there are things that get very exciting. You just have to keep your, I guess, DYOR, do your own research, but you've got to be able to keep your nose to the wind because things change. If I take how the market is today and how things are progressing, then my numbers probably make sense based on my analysis. But if something was to change, regulation or goodness knows what, then, obviously that would be off the table. So, based upon how things are today, that's my analysis, but things can change very, very quickly.
Douglas, thank you so much for sharing your time with us. We definitely want to have you back again, but just final thoughts on INX for the Altcoin Daily audience.
Well, look, I think that your audience was fantastic in their support for the INX token during our IPO, and we really appreciate it. I think that there's a lot of folks maybe listening to this, and this is the first time they've heard of the INX token. All I can say is we've laid a table for regulation. We've worked with different states to get the MT licenses. We've worked with FINRA and the SEC. We have the broker-dealer, the ATS. We really are looking at migrating all equities onto the blockchain. Blockchain today, the market cap, 1.6 trillion to 2 trillion, and it moves quickly, given the price movements underlying. But for equities, it's around 115 trillion. For fixed income, something like 130 trillion. So there's huge opportunity for these to move onto the blockchain. And I think INX is a bridge to move a lot of these different companies onto the blockchain. We're already talking to companies that are on the OTC looking to delist, drop their ticker, and list on our ATS. And I think it's exciting because, if that migration certainly happens and we've got a drop so far, that could turn into a trickle, it could turn into a river, turn into a torrent, turn into a flood. And right now, this is the early stages to find INX and to talk to us. And I urge you to learn.
Awesome. Links for INX, links for Douglas are down below in the video description. Thanks, man.
Thank you very much. Thank you, guys. Always great being here.